everybody, it's the Crypto Sniper. Glad to be with you. Yep, we're going to talk about XRP. We're going to do a bit of a Fibonacci deep dive. We already have HVF targets. When you're looking for big numbers that are reaching higher and higher, whilst not as powerful as having a macro HVF, Fibonacci levels can be very interesting. And they can, where they dovetail, so we like to cross-reference. At the end of the day, you have one line of inquiry. You actually have a plane. Or you at least have a directional line. If you cross that with another angle or take and you get a confluence, often where those points meet, you get a double layer of confidence. So different methodologies overlaid sometimes can be useful. One of the few things that I do when looking for moves that are exponential and very big moves, typical associated with crypto, and sometimes in the likes of Nvidia, and small micro mining stocks, potentially just before a gold run, you can use Fibonacci projections as well. And there's often interesting insights that can be obtained in conjunction with. I could never base a target simply off that on its own. It's better than nothing, by the way, in the absence of anything else, but I prefer to have trades where there is a pattern structure with targeting, and as a result, I start at that point. But then when I'm looking for a little bit more or a little bit of reassurance, the Fibos are often a place I turn to. So I'm going to do a quick update with you on our friend XRP. But before we do that, let's have a little check-in on Bitcoin. And we will do that over here. Here's our Bitcoin chart, and it's grinding higher. This is what we suggested would happen in our last video. You have moments where it surges, and here you go. That was the Trump trade in essence. The really strong move after breaking our capping descending grind line there, a little bit of a retrace, coming back, kissing on a return move, and then up you went. And what's happening now is you're kind of more in a little bit of a channel. And it is an ascending channel because there's buyers coming in along the lows. There tends to be a bit of a chase-up mentality. We remember this highly volatile moment with the dip wick there, but we wick trim. Broadly, you've been in an upward grinding channel, and more recently we had what we call a rising wedge, but with HVF DNA that popped out the top for a little bit more high side. And it's been grinding higher. This often happens in very bullish markets and can be treated as continuation in spite of technical structures that can sometimes imply rising wedges. And the expectation from traditional technical analysts that don't have the context is you always only, or the bulk or the priority or the probability trade is bearish. And actually sometimes a market can be so strong, it's not pumping, but on its pullback periods, rest pause periods, it actually can have an inherent bind to it. And that's a little bit of what's been going on. There was a smaller version of this over here. For example, if you'd called a rising wedge over there, you would have actually first seen it go out the other side. It did actually correct a little lower, but it didn't come very low relative to that wedge before it was going on up again. And similarly over here. So this is the trickiness. This is the climb the wall of worry, where traditional technical analysis might in normal markets be implying a little bit of downside. And you know we were quite bullish and we referred to it. We expected to continue to grind higher. And this is fairly low vol. Yes, you got a little shooting star. You had a little one there as well. So let's just squeeze a little bit more space so those pop a little bit. But it's on very, very small time frames. And I don't tend to get unduly concerned. You see that? That's a shooting star for one there. That would have been a shooting star for one there. You've got a small doji one there and a bigger one here. Now, that doesn't mean we don't have a little bit of a pullback and come on down. And there every reason under the sun, including yield curve inversion, to have more than just a little pullback. And that could be event driven. And we've spoken on the Market Sniper about the USD Korean won, why I expect there to be a substantial loss in the Korean won coming potentially soon, maybe extend and a bit later. But and the yield curve inversions, all these things, we've spoken a lot about DDEs, but sometimes you climb a wall of worry even in these periods of eventual continuation, and then the actual next thing that happens can be a melt up. So you could come back down, kiss 104 for a minute, and then you could actually go quite strongly through 110 and end up at 112, 114. It just is like that, and it's kind of nerve-wracking for someone who's trained in traditional technical analysis, but somehow can't find it within themselves to buy, because it's grinding, there's reversal possibility patterns, but really the volatility is not too high. We had a sketchy moment, and I think this was in and around a non-farm payrolls period. I stand corrected. The first Friday of the month is in and around here. And I think that was the only time where you were really pretty high volume, volatility, my apologies, not volume. You can often be high volume and volatility. They usually go together, but they're not meaning the same things, obviously. But I would say, yes, you soften a little bit overnight, and then who knows, maybe later in the American session today, or tomorrow morning in the Eastern session, or even on the European session, you can just squeeze a little higher again. So overall, we bias to a grind, a continuation of the grinding up, and we actually think the next major move could be a surge to the upside after it's kind of rested in spite of going slightly higher at every moment. So that's the environment for Bitcoin. It's worthwhile we're talking about Bitcoin also to have a wee peek at the Bitcoin dominance. See if we've still got our dominance chart there. So you had that very strong move, and then you had a little bit of a shooting star and a pullback. So the Bitcoin has been kind of leading. There have been things that have been going up a little bit quicker, but it's been kind of leading. If we have a look at it now on the market cap, you can see Bitcoin is through the 2 trillion now, 2.1 trillion by market cap. And of course, yesterday was making new all-time highs, not very far off those all-time highs right now. So bias is keep on keeping on. However, we've always said there's that big joker, but you can sit in fear of that and do nothing for ages. It'll come when it'll come, and stops are there for that purpose. Okay, so let's have a look what else has been moving relatively. So overall, the 7-day, if we do the 7-day for by market cap, you can see 9% for Bitcoin. Ethereum continues to be a bit disappointing, and you'll see that XRP has outperformed Ethereum recently, and then a lot of the other tokens actually been a little bit off. The alts have been a little bit off. Over the 7-day, Chainlink, of course, the inclusion in the World Liberty portfolio, yep, make of that what you will, obviously help that one get into the top 15 again. I can't remember what it was, but 22% certainly would have helped it get past Toncoin and possibly even past Shiba and Sui. And maybe it was lower than Polkadot. I don't recall where it was when it picked up for the last 7. In fact, Sui itself has done 27% as well in the last. So these have been big movers as a refound old friend in Link, and the slightly new thing in Sui. Okay, so let's have a look at what we want to talk about, XRP. I just thought I'd leave this with you. This is XRP Bitcoin, and it's not beautiful, but it's had a good move up, and then it's had a pause. You see, you pull back into this low period that brought you back to this slightly choppy consolidation down here at around the 1961, that's Sats. Versus Bitcoin. That's the 1800 mark. And this brought you onto a level that I'd identified previously in longer term ago history, 2200. So you've kind of sat on top of this. It's been support. You bounced. These lines were drawn long ago. In fact, I don't even draw them dashed anymore. I draw them all solid. So I'll change it to my new protocol, which is not so new anyway. But it's sitting on that 2200 level, and it's been getting support, and it's kind of, yes, this was a little high, but it's kind of done a little bit of calming down if you have a look at it, and squeezing, and this looks significant potentially with this pop and this little retrace. Are we about to start seeing XRP again begin overperforming relative to Bitcoin? Possibly so. We'll have a look at that a little further now as we go into the XRP charts. So XRP we do, and I'm going to start on the macro because there's a lot of new labels I've put in here. And I want to say, here's a little bit of Fibonacci analysis I did inside the community surrounding what ifs. It's all speculation. What if we did? What if we did something similar to the last time? Now, that's a heck of an assumption, first of all. So, you've got to understand a thought, game theory, and possibilities rather than high probabilities. What if we did last time? Remember, last time was a much lower market cap, so it would have taken much less money to make the same move. However, I also speak of the normal curve of adoption. And it's kind of like the normal curve gets used a lot for, IQ distributions and various other things. And it looks something like a bell curve. And you have the tails on the far side. It's a statistical distribution. That's a model. There's no things that are perfect for any one thing. It's just a guide for being a model. And I'm going to divide it in quartiles. And these are the tails. So, adoption could be, for example, the original gangsters of 09, 10, 11. I do think they were actual gangsters as well. Oh, geez. NSA, dark statey type gangsters and coders and geeks, but they're into the gangster vibe. And these will be your old grannies and people who hate switching on computers, your late adopters. And this will be the midpoint of adoption. And I would say, this is 09, 10, 11, 12, 13, 14, 15, 16. From around 16, 17, you're coming into the second quartile where this is here. And I think we're around here in the wall of money. In other words, the wall of money there, let's say that's the area under the graph, is about to get a lot larger. Why? Because institutions are being normalized to treat crypto as an asset for investment now, which was never the case before. And that started with the Trump trade and him coming into office. It had already begun, and you had ETFs and you had various other things. So you could argue that it started once all the talks were about ETFs, etc., around about 2016. But you're now roughly midway through this second quartile, and there's a wall of money getting ready to come in. As I've mentioned before, private bankers are putting clients on notice that they think they should have some crypto assets. This is Swiss private banks that are sending out, newsletters. This is not that long ago when I was in a futures dealing room. Bloomberg were describing Bitcoin as the criminals' money for buying AK-47s on Pirate Bay and illicit drugs and ordering hits and all sorts of nonsense on the online banking model, which can trace on wallets everything you've ever moved. Who would do that? Cash is the original private money, and they want to end it. That's why we're going into the digital everything. And they want their tax extraction, which is kissing the ring and paying homage to your master. And they're never going to give that up. I just want to sidebar on that. Lots of people saying, oh, we'll go a tariffs-only taxation system and Trump will end income tax. Never on your life. Hear me now. Okay, stop that nonsense. It's a bit like the guys talking about catching asteroids made of pure gold, and that's why gold is not limited. Never on your life is that economically feasible or possible, and never on your life will they stop the actual act of making you go down on a knee and pay homage to the extractor king. It's not going to happen. It's their power. It's their big ass power. They can print all the money they need. They've always had that means, and you'll pay tax in taxation. They want you to write a check. They want you to submit to a payment. They want you to do the records and be seen to pay them. That is the acknowledgement of a higher force that you pay. Oh, they claim they do services in your name and your behalf. Yeah, like hell. They do. They tax you through inflation as well. That's how they reward you for paying your income taxes and your business taxes. They tax you again with destroying the currency. Inflation is policy. Anyway, let's not get too sidebarred now. So there's a wall of money. So it's a shorter time frame, this period, because there's a much steeper rate of adoption. Now everybody knows somebody who's in crypto, and now they're talking about it, and the Bitcoin price is being announced with the gold price, and everything else is happening, and now you're starting to hear so-and-so's got this wallet, and he got rich doing it. Your normies, your taxi drivers, your dentists, the shoe shine boy, all the normal things are starting to hear about it. You're seeing people turn a little who were very hostile towards it. All of this is happening. So in actual fact, whilst it does sound like a big ask to expect something to do a similar percentage as occurred in the year of 2017. So back to the Ripple chart, 2017, an absolute flush out low. Now that's a bit of a schizo wick. I would have imagined quite a small bid stack. So that's kind of extreme. It's Bitstamp, by the way, the exchange. And then you started the move. So let's take the move from here rather. You got a rest pause point. Then you smashed it up there. You had a 7-month period of sideways winding up before you went back into stretchy green candles there. So I want to cover this with you. It's quite important. So what have I done? There's a lot of Fibo lines on here. So just to chill everybody out, that's the chart. There it is. You know, it's the same one you've seen all along that now everybody is showing you. Now that you've got a break of Pumpermental, everybody saw that this was another like the other, but wasn't talking about it until recently, until, of course, it started to happen. And, of course, it started to realize that the narrative of the CEO, Brad, having chats with Trump was more just the setting of the scene of the normalization of the rails that the XRP Ripple system and others like it, XLM, are going to be putting in place for the many alternative currencies you might have to choose from in future date, which may use different collateral. In fact, Ripple have even mentioned, or XRP have even mentioned on the RLUSD, that they may even use some gold backing. Well, that would be a lot better than treasury backing. I'd sooner have that tether dollar, digital dollar, than the one that bought and started buying the treasuries just as the market topped in 2020. And that's probably was the bribe that they had to put in to stop getting hassled by the SEC, because the pressures went off them once they became a buyer of the proliferated debt that continues to be churned out at a rapid rate. Anyway, back to this. That's your chart that you know. Here's what I've done that I want to explain to you. It's going to get busy again. We've thrown fibs from the high, the localized high that was in 2013, all the way down to the zero line, the not zero in terms of price, but the lowest point is the zero line of the fib. So 100% down to 0% from the high to the low. And this is already a log scale chart. And what I've done, because of the massive advancement of move, I've log scaled the fib as well. I've log scaled the fib. So it's a percentage logarithmic version of an already logarithmic chart. So please understand what we've done here. So if you try replicate this, which is not a bad idea, prove things for yourself, do it yourself. You just need to know the parameters that have been assumed. So here's what I noticed. I don't want to sit 7 months going down and or sideways before we go again. Were we to do something similar to this again, note this piece coming from here. By the way, you'll also note that the log scaling doesn't carry into the moving this over. In other words, if you've log scaled the fib and you've log scaled the chart, this cut of the chart that you do here has actually shrunk slightly since I did it because I've moved it backwards and forwards. So it doesn't know log scaling. It will just take the geometric size. And understandably, you can see the difference between $19 and $28 is a better part of $9. It's very, very small. While over here, from a fraction of a cent to $3 is much, much bigger. So you can see how percentage-wise this affects the thing. Just a quick takeoff of the log scaling, just to give you the understanding of how things will change in their appearance. So what did we get? The pause point that ended up a 7-month pause, by the way, so that high was in May, and it really started reconvening in December to go to the upside. That's a long period to go down and sideways. And other things will be happening as opportunity cost. So obviously, it's not necessarily going to do that same thing this time round. It might rhyme, but it's not going to replicate. Okay? So that pause came at the 150 fib. That's where I'm getting to. That is the extension of the 100 down to the 150 fib. The final high came at the 223.6% fib draw. That is a very big surge in a very strong alt market that saw it hit its peak in January and that was commenced it in the second week of December. So for a very short period, you got an insane move. This is why you kind of have to be in at the key moments, and that can mean eating a bit of sideways action sometimes. And I won't stay out necessarily for 7 months because it did it like this, but I might take a localized point off at a localized high and buy back in if it pauses. And where was it? I want to highlight this to you. It was at the 150%, the rest, and the final high on a log version of Fibonacci on an already log scale chart was here. Now it did actually go higher than the $2.74. It went to 331. However, it didn't make the 238, which was 4.3. It made 3.3. And you can see how big that difference is when you're in between two key Fibonacci numbers. Now, in the HVF method targeting draw that we use HVF method for, we gave a target of 19.34. It suggested that means that the $20 is run. What's super interesting is when I take the Fibonacci as I've done here from there to there, 0 to 100%, 0 down here, 100% up there, 0 down here, which is 11.4 cents. That's why I put a tag here, 11.4 cents to $3.317. What you actually get is your 150% is, wait for it, 19.35, 34938, which is 19.35. You'll see here, our target is calculated by HVF method. So the 150% expansion in a log version of a Fibonacci extension on top of an already logged chart that takes you to 150% as it was when you rested up here at 39,887, falling short of the 41,288 of the 161 on Bitstamp. So unfortunately, it didn't give the perfect. I've seen some people do it on the 161.8, and it certainly didn't do it on Bitstamp. We can maybe have a look to see if the crypto, just the general aggregation on crypto, whether it does it there. But on Bitstamp, it never made the 161. It made 150, and it made it well. So that's 28.5 cents, and you made in the end 39. So that's quite an overshoot as well. So the difference by almost getting to 161 versus just getting the 150 is quite a difference in cents, 28 cents to 39. It's another 50% on that number. But we're going to take the valid fib that was clearly run, that gave you enough opportunity to get out and actually was overshot. So the HVF target, 19.349s, and there it is, 19.35, an absolute confluence with the 150%. 19.34938. Now the ultimate high came at 223. 223. Now this is where things get a little bit spooky, where I think, I don't know if that actually comes about, because by definition that would be, we're already, if we call ourselves $2.50, we're slightly above, we're at 260 at the moment. If we call ourselves 250, it's a 4x to 10 to get to the 223 in green as it was here from this Fibo. That was essentially the safest last Fibo that was made of meaningful Fibonacci numbers. The 238 was not made. I blanked it out there, and I will show you again. Was not made and was 4.26. You made 3.31. It's a big miss if you played for that. So were you to get a similar height, let's say it takes its own unique individual way there, but it does similar percentage-based logarithmic degrees of expansion as it did in 2017. And it has, don't forget, a muted sub-bull market that failed to make a new high, compressed, rolled up in it. So you could argue XRP has more than one bull market in it. It has 1.5. It has one in a fair section. And the SEC narrative weighed very heavily on it from here all the way down and into the lows here and did a great deal of damage. That compression is going to give you that little bit extra over the percentages likely out of a Bitcoin or other alts that did make new highs. So if it goes somewhere between the 223.6 and the 238, but runs the 23.6, that would be an incredible 240.95. Now, many of you are straight away going to be doing the mathematics, as am I, and going to say, that's mega trillions. That is mega trillions, because Forexing from here at 2.5 to take you to $10, and then going all the way to 240, it's another 24 times, got to multiply that by 4. You're looking at a substantial number. And if you take the market cap of XRP today, I would suggest that's beyond this bull market, but may possibly come in a greatly reduced dollar valuation at some point in the future. So you're at about 143, call it 150 billion at the current price. So just getting to 10, which is a 4x, will take you from 150 to 600,000. 0.6 of a trillion, getting to 10. To get to something that represents the numbers I was just showing you, 240 is extreme. It's another 24 times. 24 times 0.6. You're going to be a lot of billions. Call it a half. You're going to be about 12, 13 trillion market cap. Bear in mind, Bitcoin is 2 at the moment. Now, that doesn't mean it's impossible. It just would imply unbelievable. I certainly don't feel it's part of this bull market. And this gives me additional confidence in the HVF method target, because we've got that 150 log scale Fibbo on an already expansive pullback. And mathematically, I know that's correct because our midpoint here is on the 50% fib. So projecting one full unit from our 50% would give us that. So the symmetry of the pattern being the axis at 50% as per HVF method. No one else is going to give you that level, guys. Nobody else does what we do. HVF method is unique to us. And it is our midpoint of our funnel. And we have our high 3 and our low 3, and it's locked in. And we project that, and it gives 150. And the last time it projected 150, it was a pretty good exit. As close as, damn it, on a log scale chart that you could hope to sell close to the top and still have reasonable chance of getting out. So if you started distributing at 28.5 into those highs all the way through to 39s, you would get out. And then you would see it come all the way back down to around here, which was 12 cents. And you could have bought back at 12, and anywhere along here where it's 18, 19 cents, having sold at 28 in time for the next surge that eventually took you to $3.3. So log scale plays voodoo on these charts. Please understand that. And I'm not for a minute suggesting that this is going to happen at all, or that, and definitely doubt that it happens this market, short of everything financial working off XRP, which could happen, and the whole system going down and needing to move very instantly across. So you could have this once-off absolute cataclysmic destruction on the one side of the legacy system and huge need for reflation in the new system. By the way, a couple of charts. We do actually illustrate this, and these will be going out in our new newsletter. We have this Jupiter large fiat and USDT system that has to constrict as the rates go up, which they are doing despite an almost guaranteed Fed cut of 25%, guys. 95% probability of doing it. So it's going to be a hawkish cut. The US 10-year is actually trading up. I'm just going to leave that chart for a while and show you that very fact. Here it is. It's actually trading back up. Literally, this is a 2-day chart, 4, 6, 8. That's how much you've come up. You've retouched our capping descending grind line. We're expecting this to continue on down for quite a while with rates decreasing It turned and has had a second turn. It may be topping out here and going, it might be a double touch, and will still come down, and maybe we'll have some form of fear moment where there's a rush into debt again, which will be buyers into it, and that'll cause the rates to come further down, and we may even get all the way down here or halfway down here. Long term, though, we break this red line, in my opinion, falling wedge, overall upside. So I think there's still that scope, and we've warned for this for a bit. We were talking about this 10-year on both channels here, saying it's going to go up to the capping descending line, then it's going to come down. It's done that. It's now done a double attempt that we didn't expect, and it can come down. It can either bounce on the 4, it can bounce on the splitter, and it could have an overall final spill. This would be quite negative for the economy. That would mean there's quite a bit of fear, because there's bids going back into the debt market. Remember, that's no longer the macro trend on the long term. We expect this to go up and retake 5 and to go beyond in due course, but that's not next week or next month. That's going to play out in time. So while that's happening, if those rates go higher, what tends to happen is your debt and your fiat dies. The buying power of it goes down. The amount of money they'll have to print to just service interest will be ever greater. They'll be proliferating like mad. Prices will go up. It'll seem to come out of nowhere. You'll start to see prices changing far faster, far regularly. Debt will be contracting because the value goes down when the rates go up. And this Jupiter legacy system will be via tethers pumping the Bitcoin and altcoin environment, which will expand. This is guessed to be around 15 to 20 trillion. And silver around 1.5. Those will go up, but the real beneficiary is the new system. That's why this is a crypto video. The new system that has been highlighted, that was done at 1.2. It's already 2. That's outdated in terms of Bitcoin. And then the altcoins are their own market cap as well on top of that. So we've already begun to see this reduce. And we go through this process slowly but surely, and this is how I think it looks as you go through. This Jupiter starts to collapse in on itself. And now you've got something that looks more like a moon that is still sending money. Central bankers will be buying gold until they start treating Bitcoin as a reserve asset. It seems Trump might look to do that. Tether highway gets a bit fatter, and more of the treasury debt, as these people are starting to call. You had BlackRock calling for 1 or 2% to be put in crypto, in portfolios. You get the institutions, the hedge funds, and the asset management industry to start diverting money, not so much into gold, but into crypto. You pump these market caps. And you have a lot of debt money escaping out of debt, selling the debt. The values are dropping, the rates are going higher generally, and escaping too. There's lots of pensions that are underfunded. They need some hot alpha to re-inflate their pension pot valuations so that they can make their payments and their commitments to the pensioners. You've got a massive boomer class. So with that happening, you start to see Bitcoin and the altcoins potentially becoming larger by market cap. And we're speculating and throwing out big numbers here, but eventually 100 trillion, 50 trillion, 25 trillion, first a 20 trillion, a 25, a 50, 100, 250 trillion, eventually a 500 trillion as these assets are being moved and transferred. This is going to be a parallel run. Legacy system next to the new system. Lots of new things will come in, biometric IDs, etc. Physical assets on the blockchain. They're going to want your gold and silver tokenized. They want to look online and see everything you own of value. That's what they want. That's why this is surveillance finance. That's why there is zero privacy in crypto. Bitcoin was not an anonymous spending tool at all. It was not libertarian. It was open source online banking for people to check what is coming in and out of wallets. New system, crypto and digital currencies expanding. We would say gold would go up somewhat, but not as much. Say 35 trillion for the gold market. Maybe the market cap of silver goes to 3.5 trillion. That's by the central bankers, the private money of asset managers and everybody else rushing into the higher beta, looking to establish small percents. Eventually you get to a state where the old system is virtually kaput. The less people use it, the more it falls in on itself. because it needs the scale of the activity and the participation, and you end up with a flat wheel as we're showing right here. And this is truly a very big market cap, and it is deflated away into gold, silver, and Bitcoin, and you bury that system, and soon a lot of this stuff gets grandfathered out. It rests in peace as debt, but it carries over in a digital format. The dollar will still exist. It'll be a digital dollar. It'll be a tether. It'll be a tether backed on treasuries, and then you'll have a Ripple ledger with it backed on gold and other assets, and you can decide which ones you want to use. And it's a dollar, different dollar. Hey, I might take the gold backed dollar. So I just tend to prefer that, especially if the debt market keeps going down and you have to keep being a buyer of it. Eventually, I see Tether, if it's to survive, needs to start using other collateral. We've shown how after 2020 through to 2024, you had a huge collapse in the valuation of debt. If you want an idea on how that looks, allow me to put in TLT, which is an ETF. This is a proxy indication of how debt markets valuations now look since the highs of 2020. When everybody was rushing in fear to the bond market. You got a head and shoulders. We called this. We shorted up top here. We shorted the turning on the shoulder. We shorted the neckline. We ran it all the way down. You ran our head and shoulder target, which was just at the 100 mark, having fallen from 180 and us shorting from 165s onwards all the way down through the neckline. Then you spilt a second level of spill. And in fact, if we look at this on a weekly chart, you will see that you are a rising wedge that has broken to the downside. In short, the 40-year escalator is doing a good job of replicating a pretty steep elevator to the downside. And that is valuations of debt. So the 60-40 portfolio is sitting in a situation where you have an ever-expanding stock market that's getting on eyeball-popping valuations in the 60 part, and your stabilizer asset that lost 45%. It was meant to be boring and creep up in value slowly, not as much as equities, and pay an interest rate. Well, interest rates went from the highs of Volcker all the way down to a negligible amount being paid, less than 0.33% there, and peak valuation. This reserve asset class is no longer a reserve asset. And everybody is scrambling to be the new reserve asset. And there's old gold for millennia that is still got its hand up and quietly sitting in the back of the classroom. And Bitcoin running and jumping in front of it. Choose me, I'm better, he's old. Choose me, I'm better, he's old. A teenager. A mere teenager with the likes of Michael Saylor giving advice to say, sell all your gold, America. Take the cash and put it into Bitcoin and establish a Bitcoin standard so that you crash the gold price for everybody else who's buying it. Sorry, you don't take away the valuation of gold because one nation state, even a big one, that probably doesn't have the amount of gold it says it does, chooses to dump it. If you want to do a not-for-profit sale, it's nothing new. The gold markets have been living through that. The silver markets have been living through that. Why would you do a not-for-profit sale? You'd want to lightly and slowly distribute to get the most dollars to buy the most Bitcoin. But, Michael Saylor with his 13 million number and everything he does, he's gone double down. And by the way, he's going to get very rich. I think he's going to get very rich. They're going to maintain Bitcoin and it's going to go. He's already very rich. You know that. I know that. But some people get angry. They go in the comments, leave Michael Saylor alone, sniper. It's like, poor Michael Saylor, little old YouTuber in the middle of nowhere is beating up on him too much. Come on. This guy is full of BS. Full of utter BS in terms of what he says. How many chairs are you sitting on? I'll never forgive him that. And this notion of he'll crash gold to zero, thereby destroying the balance sheets of all your enemies, China and Russia. Well, crushing China sure as hell will be a problem for Walmart and a lot of other people that buy goods, most of it all made in China. You aren't going to crush your enemies doing that, Michael. I'm sorry. And you couldn't chase gold down to zero. You could reduce its price for a while until the overhang has been bought up. And then you're going to sit with a problem because buying it back, should you ever choose to do so, it's going to get a whole bunch more expensive, especially while your Treasury Department is printing up $1 trillion every 100 and 80 and between 80 and 100 days. So I would imagine that good old physical has got plenty of a purpose to serve. It's also quite interesting to see XRP actually works with gold and has contemplated utilizing it, set up a lot of arrangements for it, instead of trying to be gold. It's Bitcoin that's trying to be gold, the better version, the digital version of gold. XRP wants to be a railway network for serving the financial system and facilitating lots of things, including gold-backed stable coins, purchasing gold with cryptos and everything else. So not everybody has taken this adversarial, and to be fair, Peter Schiff does the same, just in the opposite direction. But it doesn't quite talk as much BS as Michael Saylor does. Anyway, let's leave that discussion there and let's go back to the points on XRP. So 150% absolutely confluences on a log-scaled Fibonacci with our current expected target. Bear in mind, you did overrun this target, and even small visual overruns on a log scale are big differences. In other words, 28.58 is less than 39 by quite some way, because you almost went all the way to 161, but you missed it by around 1.5 cents, which is also in of itself not insignificant. So were you to do 19, you may make 28. You may make 27.5 overall, but it would be pertinent to start reducing to some degree. I would probably take right up eventually to 50%. I wouldn't necessarily do it all though exactly at the 19.34. I would watch it at a lower time frame level, and I would slowly distribute over the course of that and probably lock in 50% of gains and expect thereafter and hope that we have less than 7 months of sideways market until December. Because that's kind of what happened here. That's a pretty dull year. And in fact, don't forget, Bitcoin paused from May and went sideways until the election was over. Let's remind ourselves of that, how sideways you can go. By the way, we called that break there. We said this is now the reassertion of the bull market. When you broke that capping descending grind line, it's in all our videos. We told you the money's coming back. It's going to run. Then you had the pump and return move, and that was your best part of the trade. You could have even bought there at 66,000. Today you are 107. And the best part of that move was the earliest part of that move. You've also noted that you've had this extended period at 96. That was a target for us. And of course, 100K is a key level. So a little bit of selling wick there, a little bit of selling wick there. You can have a small moderate pullback and then still end up going higher. But we are on a bull flag target for Bitcoin that takes you to 145. We continue to reassert that. And you also have an inverted head and shoulder that dovetailed with that flag. So that's a double target, almost on exactly the same value. That is two patterns giving you the Bitcoin 145 as a point of rest. So please bear that one in mind, very much like the XRP. Now, I don't know what to make of 240. I think it's one for the future. Don't forget, it's kind of like an NVIDIA story. Nobody saw that thing going up as much as it did. It kept on coming on. You think you're happy at 20, it goes to 240. Tesla's done something simple like that. I feel longer run, the 4-year cycle is dissipating and the need to expand the new system will take priority, and you might get an extended bull. But that doesn't mean you won't have pause periods. Okay, let's have a look at the smaller time frame, how it's gone. You crept out of the bull flag. We called this bull flag, by the way, and we said that's your ticket to $10, which is a Forex. Feels like a flag. You broke it there. You went super low vol, a little dip down, and you've started the walkout process along this pole. That pole takes you to, as we've said before, the $10, $11 range. And it comes from whence just prior to all the election news and the probabilities of how Ripple will, XRP will, let me correctly say, be unleashed, and a more crypto-friendly environment will soon be in place. So I feel this is going to probably move. I'd love it to go as fast as this line. It may in bits go faster, it may go slower. So I can't tell you how long it'll take to make 11. This is pointing to January in 2025 if it were to go up as quickly as it did prior. And that is not a rule. That's not a thing. It's just a guide. It's just a guide. The second leg can take a lot longer. The second leg could happen quicker. The second leg could take approximately the same time. There is no way of knowing, and I'm not going to even pretend to know to tell you such. But that would take you to 11.2, which is 50% of the way to our eventual expected target. Pretty cool, and would mean 2.77 over 4.5, I would imagine, times from here to get you to 11.23. Okay, so that's your update on XRP. XLM's kind of, well, let's show you Sol first. Sol's kind of getting to a point where it might break out of a similar flag. So you could get the old dominance coming back. The Solana flag has been a lot longer in the making, so it's fallen behind XRP in terms of recent progress, but it is now coming to a key technical point where it may begin to reassert. So this particular technical pole that's gone up, you had a nice wind up. We traded that one, beautiful HVF, falling wedge. That was a lovely springboard up. You had incredible momentum from here all the way to there. You know, that's an unbelievable run. You know, not much above 153, and that takes you to, wow, 227 type range. So big move there. You're looking like you may be coming to that point where you'll break out. So there's a free one for you. Check out Solana. It's not a squeezy, it's a flag, but nonetheless, it stayed in the top half of the flag. A little bit of a splitter on there. It's sort of supported on there, and it's now testing. Look, if it turns around and reverses back down, it's been postponed, but you could be getting a triggering event on a flag there, a bull flag to the upside. By the way, then what would that mean? Some of you, let me second guess the future questions. What would that mean? I would project from these lows here. This is where the move kind of began. I mean, technically you could draw down there, but this was a lot of chop suey as far as I'm concerned. You want to catch what the point at which it made up its mind it's going up. So to target for that, we remain in log scale, and I would probably take that last low there, and I'm going to give it a different color. Let's get to the high, which is the highest point, 264.32, or I wanted to measure the other one, and I drew the line. The other one was 264.63. So it looks like the first one is the higher one. And then we want to clone that. Let's make it a pop a little bit and give it a different color and make it full because it's getting mixed up with other lines there. Clone it. So here's a thing that a lot of people are doing in their technical analysis, and I don't agree with it, and HVF method doesn't agree with it. We don't trade from breakouts, what you think is a breakout, especially on an angled descending line. You don't put the projection here. Lots of textbooks will say it, and they are wrong. Yeah, sorry, lots of textbooks will say it. This was a localized low from whence you began the move up. That was a continuation pattern. That was a continuation pattern, and that's a localized high. You must go from another localized low inside of the pattern to project that same amplitude to the upside. So you are applying the rule with real symmetry, and that should be a localized high where you take rest. So that should be run and a localized high point. This is also looking like three rising method for those of you that know candlestick chart. So it's a bullish pull up, and then you get three spinning top smaller candles, and then you get another pole. So it's kind of almost there, not quite a perfect example, but this can then be a tactical candlestick pattern that suggests an upside break. So Sol looking like a little bit of an up leg there. In blue, that's quite a move, guys, 399. That's probably going to see you on a 400 run. You're at 227. Yeah, I don't want to say 100%, but you're not too far off. You're 85, maybe even a 90% move potentially. And it is also getting ready to trigger. And it's lost ground compared to XRP, for example. So Sol was after, I don't know why 143 billion, by the way, is below 140 billion, but let's just park that one up. That's my Sol alerts going off, by the way. So right here, right now, you are hearing it live as recorded by me at that very moment. The Sol is potentially breaking its flag. Okay, so we were watching that one. This should be higher than the Tether. The 105, though, is a good 40% below the XRP, and you might get a little bit of catch-up if that starts to march. But don't forget, XRP could be marching too. It's just a question of who's going to march higher and for longer. The flag has been a longer pattern for Sol, so you might actually have a little bit of outperformance on Sol. It depends how big the news is that might be driving XRP outside of their Ripple ledger. Okay, so we've covered quite a fair bit in there. Is there anything else I want to show you? XLM was the one I was looking for. Didn't hold on to its little push near as well. XLM for now is actually a little bit of XRP laggard. Little bit laggard. But then when it does run, it runs like a monster. So watch it. If it gets to its break, then put it on. I wouldn't put it on before. It may not perfectly correlate with XRP. And I would say Sol is breaking out now. I'd rather be in that and wait and see how XLM does. It's likely to follow XRP, but I would, because of the correlation, the possible correlation, I wouldn't put both on until it was clear that it was about a break. And I'd continue to stay in XRP that already has broken and potentially take Sol for a little bit of variation as trades right now. Okay, I think that's it. We showed you the interest rates. We showed you the debt collapse. There is fear out there, guys. And at any point, you could be hit, but we're going to climb a wall of worry. We're not going to stop it from letting us get into the trades we want. But this is a collapse in yields in Chinese debt. So that means a lot of money going into the debt market. That typically means it's coming out of the stock market, out of property, out of everything else. So parking base. So it's quite an interesting development in the 10-year Chinese. Their debt is going up in value and their yield is collapsing. They probably need lower rates to help their property market, to help their consumer, etc., etc. What else have we got there? Two other things. We've done the Bitcoin dominance. So I think that's all of what I wanted to share with you today. But a little bit of a look in. So to recap what we got, potential move of outperformance for XRP against BTC. We've been talking also, I feel like I want to do Sol BTC because there was a setup in there as well. And you saw the dollar-based argument. Is Sol going to turn around against Bitcoin as well? We did see this structure for quite some time and it broke to the downside initially. But now it's hammering and it looks like Sol might be a bit of a recovery play against even Bitcoin. That's the hammer that's currently in play. It's the week. Well, we're not the end of the week yet. We may need to see. But there was a little bit of squeezy action and it looked like you broke to the downside where it possibly could have also been up. But now it might have found a floor just a little bit below there. We're going to have to watch and see what happens. It might come up and over. In short, this squeezy pattern may extend a little more and we might be redrawing it. Let's take that magnet off and we might be redrawing it like this and seeing what happens. It could come up and over for a third impulse and then break to the upside. So let's watch the progress of Solana. Let's watch XRP. Keep an eye out for XLM, but it's got a bit of work to do. These are the majors. We don't get 2G Gen on this YouTube channel. We do actually discuss it a bit more inside the community, and we have a few of those. But I've just avoided that because of people that are engaged in manipulation practices. We'd sooner be involved in high liquidity tokens that there is no way me or my community could have any adverse bearing to anyone else on YouTube that came in and saw it. These are not recommendations. This is non-advisory. This is purely entertainment. Thank you for watching. Hit the like, book a call below if you would like to see more of what we are doing in our bespoke community platform, by the way, where you'll know exactly what my makeup of my portfolio is as it changes, what I'm choosing to trade, why, and all the interactions with our community leaders, all the interactions with my daily updates through your app on the phone, everything, all bespoke, not a WhatsApp group, not a Discord group, high quality recorded content. And if you're unsure if you're ready for that, you don't want to talk to someone, you're afraid, you're an introvert, book the free mini course link and watch what we are giving you as free advice in terms of asymmetric trading. where you use a little bit of judicious leverage with stops, with key money management to accelerate your growth during one of the most fertile periods that ever exists for building wealth. A high growth, high beta asset class with sufficient liquidity to trade leveraged in the markets that will give you an opportunity to maximize your wealth and buy you the most freedom in reset times. Till next time, I salute you. Goodbye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.